Hello and welcome back to the Mid Vancouver Island real estate market update. It is for the week of April 5th this week. I am Debbie Simmonds with eXp Realty. I am going to get into this really quickly because I have a lot to talk about today. We're going into the macroeconomic picture, which is taking a lot more time. So I'm going to share the screen and just show you what the market activity was this week. All right, we are in full swing here in the spring market, a tremendous amount of activity. Again, 50 new listings here. You can see them all here, starting with a lot at 298.8 on Thetis and Ladysmith, and up to a $3.225 million waterfront out in the far end of north end of Ladysmith Harbor. New pending sales, we have 18 new pending sales just in the last week, just for Crofton, Chemainus, Ladysmith, and Saltaire. So that's a tremendous amount of activity for this small area. And you can see there's now 3 pages to our weekly hot sheet. I'm just going to flick through it quickly. So you see that the volume of activity is growing and growing and growing as we proceed towards May here. We have 17 new completions. You see all these solds down here. That's what that means. 17 properties in the last week changed hands to their new owner, and one expiry. Okay, we have very, very important news to get here today. So the macroeconomic picture is this. We'll just summarize very quickly. Low interest rates, low supply equals tremendous demand, tremendous amount of multiple offers, not enough listings for the amount of buyers that are being driven to buy because of the low interest rates and other factors like COVID and people being displaced out of cities and wanting to be in semi-rural areas like ours. So here's what the government could do. So the government, they could increase the new supply. They could fix this at the source. What they could do is increase, and what that means is to, make it a lot easier for our developers to build to meet the demand that's happening right now. But the opposite is happening. We have very, very slow development with miles and miles of red tape. Huge fees, a lot of fees to the government, a lot of bonds being held by the government, and just an incredible slow progress, very, very arduous progress. Instead, what the government seems to be doing, instead of just increasing the supply, which would help everybody, what they're proposing to do is increase our down payments, to increase our B2 stress test, which, if you probably recall, 2 years ago, it was brought in, whereby buyers had to qualify at 2% higher than they were actually borrowing at. And yet interest rates have stayed so low and are presumed to be for about 3 more years. And they are thinking of putting, as I said last week, capital gains on our homes. That is outrageous. It's outstandingly cruel to the public. On top of us being the 3rd highest taxed country in the world, they are now proposing to do that, to take away our one inalienable right. The government paid a group of professors at UBC and their cohorts $250,000 to explore taxing our primary residences. So we know this is in the work. They're not going to spend $250,000 and just shelve it, not likely. So we need to prepare for this. Talk to your accountants. The likely time that a government would do this is it would be after the election, because they would obviously lose the election hands down if they do it before. And also it will then have to be voted in, the new budget by the new government. So there's a little bit of time after the next election, but you really need to think about this seriously. I certainly am. I am on top of it, and everybody needs to be on top of it, because it's going to take a huge hunk out of your retirement savings. Okay. The Chinese have a down payment method that they're looking at too. I know they're looking at this. For their first home, the down payment's 20%, the second home, it's 40%, and the third home, it's 60%. So they may bring in a graduated thing like that. That might be something that they're looking at, just to sort of stimulate your imagination as to what could be coming down the pike. And the other thing that happened is that the government, for the second time since COVID started, gave themselves a raise. This time they gave the MPs a raise of $3,200 and the Prime Minister $6,400. How out of touch is that, when restaurants and small businesses are hurting so badly, going out of business, and homeowners are getting squeezed with more and more and more taxation? So this is not good news for the average Canadian, but what is good news is we can discover this stuff and react in our best possible way. By always staying in touch, listening to my cast. I will always bring you up to date on what's happening next. Be on top of it, know what's coming at us, and adjust accordingly. You may have to retire a little bit sooner if it offsets that. If they actually bring it in and the government changes hands and the new budget brings in capital gains on our homes and all of these other things I've just talked about. So yes, very difficult market still for buyers here right now. Fantastic market for sellers, but all of us need to look ahead to our future and secure our family's financial future and our planning with these very important factors in mind. So thanks very much for listening and joining me this week. I'm Debbie Simmonds with eXp Realty. I do all types of real estate, so please call me with all of your real estate needs. Professional, caring, kind.